Hi everyone, welcome to today's video. So let me start today's video by analyzing the Nifty levels. So if you consider Nifty from 22nd of June, almost 22nd of June up until here, you will see that markets have given roughly 30% gains. This is part one. Part two is that half of these gains have come in the last 3 odd months. So comes the natural question that, yeah, should we book some profits because markets have given very good run up in the last 1 year? Or should we wait and watch? Or should we build position? What is it that we should do? Should you book profits? Short answer there is yes, right? So on this video, I'm going to help you understand 3 critical things. Number 1, that are the markets overvalued? Should you cut your positions? For example, if you have 10 lakh rupees invested in the markets right now, should you probably sell like stocks worth 5 lakh rupees and book profits and go away and think of a better time of reinvesting it? Part B that I'm going to talk about is that what is the meaning of cutting your position? What is the meaning of booking profits? How to sensibly reinvest? I will give you a little bit of commentary there. And third and finally, I will have a stock specific discussion that are certain stocks. For example, HDFC Bank, is it overvalued right now? Is IDFC First? I have it in my portfolio. Is it overvalued? Is Reliance overvalued? So I'm going to do that discussion. Very important quick exercise here. So I am stating 4 different assets and I will read it out with you. And you tell me in the comment box, which of these assets are overvalued? So do you think that HDFC Bank versus IDFC First, which of these 2 assets, one of these is overvalued right now? What about Tata Elxsi versus Nifty IT? Which one would you pick versus not? Third, in Nifty 50 versus Reliance, which one do you think is overvalued? And finally, between Nestle and Page Industry, which one do you think is overvalued? I will reveal my answer along the videos, so do watch it completely. Also, a very humble request that please press the like button. I relate a lot of business, lot of technicals, lot of fundamentals, macroeconomics, all combined, and give you all this information so that you can manage your own portfolio. My goal is to teach you how to manage your own money. So that is the spirit with which I'm operating. I know that you haven't pressed the like button. So press the like button and we will get started. So before answering the first critical question that whether the markets are overvalued or undervalued right now, let me give a very quick Nifty analysis, what I think is happening on Nifty. So this point as of today is somewhere around 19,450. Now this line that you see, this is a support line. Support means that it is likely that the Nifty is going to retrace to this level, or in case Nifty retraces to this level, there is a good likelihood that it might bounce from this level. So this is a support zone. This exists at roughly 18,600. So there is an almost 900 point gap between these 2 points. There is a very, very good chance right now that the markets are going to retrace. It is going to hit this point and bounce back. So that is one very possible scenario that might play out. The second possibility is that of a bull run possibility, which simply means that, see, one very good support level has been built at 18,600 levels. Then they could fall down. Then they could go up. Then they could fall down. Then they could go up. Then they could fall down. So this way, another support could be created. So this first support might not be tested at all. During a bull run, these type of scenarios or these type of technical levels do get built. So please don't discount this second key thing. This is a very important point. Now, with that viewpoint out of the way, let me quickly help you understand fundamentally through data whether the markets are overvalued or undervalued. Now, in order to understand whether the markets are overvalued or undervalued, there are 2 specific techniques that are generally used by analysts. Now, these are not the only 2 techniques, but these are the 2 most popular ones. The first is called as Buffett indicator. Now, Mr. Warren Buffett would have popularized this ratio. Therefore, it is probably called as Buffett indicator. What it simply means is that if you take the market cap of listed companies in India, and the GDP of India, you divide the market cap by GDP, and if the ratio comes out to be more than 1, so let's say that it comes out to be 1.1, then it means that the market is overvalued. Why? Because the ratio is greater than 1. And on the flip side, if the ratio comes out to be 0.9, then it means that the market is undervalued as per the Buffett indicator. Now you might say that, okay, so yaar, theory ho gayi, right? And why do I believe in this? So let me help you understand this concept very quickly. So let's study the numerator and denominator separately. Now, what is the meaning of market cap? Market cap means the size of the company is what? So for example, if you consider the Indian market, then you will have companies like ITC, HDFC Bank, TCS, and a bunch of other listed companies. Now, if you go and aggregate the total market cap of these listed companies, let's say that it comes out to be what? $3 trillion. Then theoretically, what should happen is that the GDP of the country should also be roughly around $3 trillion. Now you'll say कि ऐसा क्यों, right? Why is GDP this thing linked with the market cap of listed companies? Well, you have to think it this way, that what is the definition of GDP? The definition of GDP is the total value of goods and services that are produced within a particular country. अब ये तो हो गई economics definition. Now you need to ask a practical question here that, okay, this is the value of total goods and services that is produced within a particular country. But who produces these goods and services? Well, according to Buffett indicator, it is these market cap companies, or these companies are producing this GDP in a way. And there is a very strong correlation. Please notice the word strong correlation. I'm not saying perfect correlation between market cap and GDP, but there is a very, very strong correlation between this numerator and denominator. So therefore, in an ideal scenario, the GDP of a country, if it goes up by $1 trillion, then theoretically, the market cap of all listed companies should also go up by $1 trillion. So this is what the concept tells us. Now you might have a natural question, yaar, India mein to there is unorganized sector also. So how can you say that it is only for listed companies, this, that? I 100% agree. So therefore, this concept of Buffett indicator works better for a developed market compared to developing nations like India, where there is a lot of leakage in terms of the market cap of companies, or there is more unorganized sector in India. Now, acha, ye to ho gayi theory wali baat. Now, how do you relate it practically to the stock market? So let me go to Buffett indicator and what the data is currently telling us. Let me quickly show that to you. And then you yourself will be able to judge it, whether the Indian markets right now are overvalued or undervalued. So this green line that you see, it is the total market cap to GDP ratio. And back in September of 2021, this ratio was 119.31, or it was 1.19. That is what the ratio was. So from that perspective, was the market overvalued in September of 21? Yes. So the markets were overvalued, and it reflected in the stock price also, that from October of 2021, there was a year of massive correction in the stock market. Now, what is the data telling us right now? So the data tells us that the ratio is 0.96 as of now. So are the markets overvalued as per Buffett indicators? The short answer is no. This is what the data is telling us. Now we can keep finding holes in Buffett indicator theory. But according to Buffett indicator, which is a reasonable indicator, the markets right now in India are not overvalued. So then comes the second method of understanding whether the markets are overvalued or undervalued. That is called as PE ratio, or price to earnings ratio. Now, PE ratio is also applicable to individual stocks. For example, many a times you would have seen analysts speaking about the fact that kisi stock ka PE ratio, for example, DMart ka PE ratio was at 300, right? Or Nykaa ka PE ratio was at 1200. So these are highly overvalued stocks. Maybe, maybe not. Now that same analysis can be applied to the overall stock market, because the overall stock market also has a certain PE ratio. Now, we will not get into theory much there, right? I will speak about more practical points and money-making points here. So what you would notice is that if you take a look at this particular graphic, you will see that the PE ratio back in 2021 of the entire Indian market was close to 35. Then it kept on falling, and this was in, again, September of 21. So one could argue that compared to the historic PE of the Indian market, this number here was fairly high. Then the markets corrected and it kept trading sideways. So right now where we are sitting, so roughly we are sitting at a PE of 22. So that is where we are sitting. Now you can make a call whether this is overvalued, undervalued, vagera, vagera. Now everyone can have their own estimates. For example, many people will say, your markets will become cheap only when it falls below 20 ka PE. That is also correct. Many would say that no, it is like fair, right? 22 ka PE is fine. There is no head or leg to it. There is a video that I had done on PE. Please go and watch it. It will give you more clarity around this concept. But by any standards, at a PE of 22, we can definitely say that the markets are not overvalued. Please notice the word that. We cannot say that the markets are overvalued at a PE of 22. So the first critical point, or first critical question was that are the markets overvalued right now? No, the markets are not overvalued. Then comes the second critical related question that, okay, maybe the entire overall Indian market is not overvalued, but maybe some segment within the Indian market might be overvalued. For example, finance stocks might be overvalued, or small cap, mid cap companies might be overvalued. And I keep on reading articles like this. So this was printed by Mint, where they scared the investor. They said, you know what, small cap mein bubble ho chuka hai. And a lot of people started, stopped their SIPs, etc. So whenever you start reading this type of stuff, at least do yourself a service. Please go and check. Do a little bit of Googling. Do a little bit of analysis. And ask yourself that, hey, is small caps overvalued or not? Now, I cannot take you through all the segments. कि मैं फाइनेंस भी एनालाइज कर दूं, मैन्युफैक्चरिंग भी एनालाइज कर दूं, लार्ज कैप, मिड कैप वगैरह वगैरह, बट आई विल पिक case study of small cap and teach you how to do this analysis yourself. So let's go to small cap and start analyzing the data from 2018, because most of us, when we invest our money in the stock market, what is the horizon that you're keeping in mind? You're usually keeping a long-term horizon, right? So let's look at long-term first, and then we will move to short-term. So if you study the entire small cap BSE index, I'm talking about index, not an individual stock here. What you will notice, this is 2018 and this is 2023. So in 5 years, how much returns have you made? So you have not even made 50% returns in 5 years. In fact, it would be less than 9. So it's not as if that small cap over a long-term horizon has given a massive return. This is 0.1. Now compare this with Nifty 50. That how much returns Nifty 50 has given from 2018. So I will pick this from here. And here you will see that Nifty 50 has given almost 81% gain from the year 2018. And small cap, which is a more volatile segment, theoretically, small caps, because they are more risky, more volatile, they should ideally give more returns compared to Nifty 50. Nifty 50 is big companies, and small cap index comprises of small companies. Then typically under normal market circumstances, small caps outperform the large caps. So then would come the natural response then, okay, then why is it that, media is creating all this halla that, small cap is in a bubble and, everything is going to fall? Okay, I don't know, because they are probably picking like short-term viewpoint here. And let me show that to you also. So for example, if you consider small caps from here, right, from its bottom up until top here, so how much gains have small caps given? Well, they have given 41% gain. Now, how much has Nifty 50 given from this exact analysis? Nifty has given 28-29% gain. So of course, now you can say that, what, last 3-4 months mein, small caps have gone up by like 41%, but large caps have only gone up by like 28%. Therefore, bubble in small caps. So for this, you need to understand the concept of profit booking. So let me introduce you to that concept, and then probably I will continue this conversation. So the concept is fairly simple, that when you are booking profits, for example, right now you might be thinking that, small caps are pralay aane wali, right? Everything is going to get like destroyed in small caps. So you need to ask yourself 3 questions. First question is that, are you looking at small caps or any stock that you have in your portfolio? What is the vision or the time length that you're looking at? If you're looking at it for only 3 months, then probably, believe media and, don't do anything and, cut your SIPs or whatever. Versus if your viewpoint is that, we are a long-term investor, then behave like a long-term investor. Don't just think for 3 months, at least think for 2 to 3 years, right? Look at the analysis, at least in that time zone. So this is point 1. Point 2 is that if you are booking profits, let's say that you cut your positions in small cap, you might be sitting on a little bit of profits. So are you going to cut all your positions? This is full profit booking. Or are you going to do partial profit booking? So you need to come up with a methodology around it. Now I will write a specific post on what stocks am I booking partial profits on, and what stocks am I booking full profits on member community today. I will also be organizing and doing a special class, which takes place this Sunday. So there I will teach you how to understand these concepts in much more detail. I will take you through several case studies around it. So in case you feel that that is useful for you, you could consider joining it. So here in point number 2, you need to be more nuanced. You need to understand ki chalo theek hai yaar, I'm not like fully confident. Maybe I'll book only 30% profit on small cap. Then you need to have an understanding, why not 50%, why not 70%? Then comes the third step, that you might have booked some profits on certain stocks, or you might have, just cut away your position in small caps. What would you do with that money? Because if you are having problems reinvesting that money, what is the meaning of reinvestment? That let's say that you purchased 10 lakh worth of small caps. Your portfolio grew to 12 lakhs, right? You booked 20% profits. Now you're sitting on that 12 lakh money, right? And what ends up happening is, or it might end up happening is, that the markets keep on going up, up and up. And now you're purchasing back those small caps again at, after they have given a run up of 40%. Then how would you feel about that? There is a very interesting quote which goes something like this, that people have lost more money waiting for a market fall rather than investing their money and actually incurring the losses. So this is absolutely true, that most of the retail investors end up not investing it and end up losing a lot of potential gains. Just to contextualize that better, that in a 20-year period, right, 20 saal, 20-year period, if you miss just 20 days of best gains, then half of your profit will go away. So this is a very, very important point. Whenever you are pulling money out of the market entirely, be very considerate. You should have a very clear understanding here. you know what, bearish scenario hai, right? It makes much more sense to take money off the table. So to summarize all these 3 points, one very important consideration that you need to keep in mind is that how much money to keep in stocks versus cash, right? So right now in the market, I'm like 95% invested in stocks. Even when I'm booking profits, I'm reinvesting the profits in some other stocks. I'm not playing the game where I'm 60-40, right? That, okay, 60% in the market and 40% cash positions. Because then my cash positions will become like really big. And then I might witness this reinvestment challenge. According to me, we are still very much in a bull run. There is no point in pulling money out of the stock market and building your cash positions as of now. So from that particular viewpoint, now let me present the final section of the video where I will start comparing certain stocks and give you my perspective of partial profit booking, full profit booking, selling, not selling, why am I not selling it, vagera, vagera. So let me have a very quick conversation there. So let's pick case study 1, which is IDFC First Bank versus HDFC Bank. Both the stocks, I have massive positions. I am sitting on more than 100% profits on IDFC First Bank. I had been speaking about this stock 6, 7, 8 months ago. And now I'm very, very happy with my positions that I built. I've built huge positions on it. Am I selling anything on IDFC First Bank? The short answer is no, I'm not selling anything. But please understand the perspective as to why am I not doing it and what is likely to happen on this stock in the short term. So here, if you take a look, right, the IDFC First Bank is almost at its all-time high or probably at its all-time high already. It has given a massive run up from here, from 24th June. It was at 30 rupees. Right now, it is at almost 80 rupees. So, massive returns already on IDFC First Bank. Am I buying IDFC First Bank? No, I am not doing it. So now comes the natural question that should you book full profits? Or should you book partial profits? Or should you not book any profits, right? So I will quickly tell you my perspective on this. Should you book full profits? No. Why? Because I still feel that IDFC First Bank is in a very good shape. It is run by a very good management. I've done a separate video on that. You can go and check it out. Overall, very, very strong stock. Why? Because see, right now the market cap of IDFC First Bank is 55,000 crore. I at least expect this to 4x from here. Why? Because it will then be 200,000 crore. Now, do you know the size of HDFC Bank? It is almost 5 times of this. So even from this point, I at least see IDFC First Bank 4xing from this point. Now, will this happen without volatility? The short answer is no. Volatility means that it's not as if that it will keep on going up like this. No, it will probably fall like this. Then it will rise like this, like this, like this, like this. Now, I'm not here to guess. The simple bet that I'm taking is that 50,000 crore, it will go to 200,000 crore. So this is the bet that I'm taking. I'm very happy putting my money for 3-4 years. And if this actually pans out, then how much money am I making from this point? I had built most of my position during this zone. So you assume that I had built it at 40. Stock is almost at 80. From this point, if it becomes 4x, so how much this becomes? This becomes 320. So from my initial investment, how much returns am I making? So I am at least making 8x returns. Now see, this is a very important concept to understand that I have already booked partial profits on IDFC First Bank. Partial profit means let's imagine that I started my investment with 10 lakh rupees on IDFC First Bank. It went to 15 lakhs. So I booked roughly 3 lakhs worth of profit. Now this 3 lakhs worth of profit provides me with enough cushion to play this game, right? So this is the game that I'm playing on IDFC First. Therefore, I'm not selling the stock even at this juncture because my cushion has already been built. I'm already sitting on very good profits. I still see this theory panning out. So to cut the long story short, I'm not selling IDFC First fully. I'd already booked partial profits on that stock and I'm very happy with it. So this is point 1. What about HDFC First Bank? Well, should you book profits? Should you not book profits? Many of you would have purchased and you might be sitting on 15-20% gains already. Should you book profits? Should you not book profits? Let's quickly discuss. So if you look at the performance of HDFC Bank, what you will notice is that 2018 say they have been able to double their revenues. They have been able to almost 2.5x their profits. So no problems in revenues and profits, highest ever sales. What about valuation of HDFC Bank? You will say, yeah, 1633 it is trading. So probably bad stock, this, that. Okay, so check the PE ratio, right? So here what you will notice is that the stock is available at a PE of 20, okay, right now. When was it last available at a PE of 20? Well, it was pre-COVID that it was available at 20, in fact, slightly more than that. So from a valuation point of view, is HDFC Bank really expensive? No, it is not expensive from that perspective. Now, this is called as tailwinds. Tailwinds means that, favorable circumstances getting built. Now, what is a favorable circumstance? Well, you would have already read in the news that HDFC and HDFC Bank are going to merge. Now, what is the primary benefit of this? Well, there are multiple benefits. For example, HDFC has a lot of unique customers. HDFC Bank has a lot of unique customers. There will be a lot of cross-selling opportunities. This is part A. Part B, there can be cost optimization, cost rationalization. Instead of having an HDFC Bank branch also, an HDFC also like in the same complex or same mohalla, they might merge the two branches, so to say. So that leads to cost cutting. They might be able to save some cost in terms of lesser hiring, vagera, vagera. So from the perspective that right now it is anyways deeply discounted, what will I book my profits for, right? I'm already sitting on like 16, 17% gain on this stock. Just because I have 16% gain, zabardasti profit book kar lo. It doesn't make any sense to me. So from that perspective, I'm not even booking profits on HDFC Bank as of now. Why? Because it is already undervalued according to me. I'm maintaining my position. Maybe it will start giving a run up 6 months from now. I don't know. Maybe like 1 year from now. I don't know. But I know for a fact that right now it is undervalued. And whenever it gives a breakout, it is going to give a massive breakout. People will not be able to chase it. So, okay. So I hope that this point is clear. Now let me move on to example 2 and category 2 type of stocks. So right now there is a lot of news around like IT industry and artificial intelligence stocks, vagera, vagera. And people are betting on something like Tata Elxsi in India, and we are comparing it to Nifty IT, right? Now, let us do a very quick comparison between these two assets, that where you should be booking profits versus not. So, okay, so let me first pull up Nifty IT and let me show you how Nifty IT has behaved. And the meaning of Nifty IT is that it is the overall IT index. So this is the combination of TCS, Wipro, Infosys, all the IT companies put together in that basket. So if you consider the Nifty IT performance, what will you see? You will see that it is still trading at almost a 27% discount. I started buying Nifty IT somewhere when it was at 30% discount. So thoda bahut profit is already there for me on Nifty IT. And right now it is still trading at a 26-27% discount. So this is point 1. Point 2, you might not have noticed that this is already following that channel trading strategy that I had earlier spoken about. So it is towards the bottom of this channel. Likely scenario is that it might go up if some positive news comes. So there is an immediate chance of capturing how much gain? Almost 16-17% gain on Nifty IT, which is a relatively safe index. But people are thinking कि यार what AI का trend आ रहा है, tech trend आ रहा है, US में stocks पिटे हुए हैं वगैरह वगैरह. So let's bet on AI stocks per se. And India में the leading AI player is Tata Elxsi. So, okay, so let us quickly analyze that. So point number 1, is Tata Elxsi a bad company? Absolutely not. I held it, but I have cut my entire position on Tata Elxsi. I make all these announcements on my member community also. So in case you want to benefit from that community, you could consider joining it. It's a community of serious investors. It will teach you a lot about stock investing. So back to Tata Elxsi, let me quickly present the analysis of Tata Elxsi. Why, according to me, it is overvalued. But before I jump there, I know that a lot of people will get like, miffed that, why are you saying like negative things about Tata? See, I have like nothing against Tata Elxsi. For me, I'm putting my money wherever I feel that I can pull it out, reinvest in better opportunities. I do it. Now, Tata Elxsi right now, just after making this video, it can very much give like 40% returns. I don't know. No one can guess it. But that does not mean that I'm losing out on 40% returns, right? If I've sold my position on Tata Elxsi, I would be reinvesting it in somewhere, right? So please consider that also, because many times I get the commentary, yeah, Akshat, you purchased like ITC at 200 rupees. Now it is like at 450 rupees. So you have lost so much money. No, I have not. I made my returns of 40-50% on it. I rotated it to some other stocks. And of course, I can be, as an investor, be wrong about certain bets. I cannot perfectly time it to what extent a stock will move, but I have to go by what valuations, data, numbers are telling me. And many a times I will not be able to completely capture the return. But that does not mean that I'm generally making losses on my portfolio. My portfolio is doing fairly well. So, okay, so let me take you to Tata Elxsi. If you check the numbers, you'll be mighty impressed, right? That, okay, now it has almost 2.5x its revenues. It has almost tripled its sales. So very, very impressive figures, no doubt about that. But let us also check the stock price. So let us go and let's check pre-2020, post-2020. So here what you'll notice is that, see, pre-2020, it was at like almost 700-800 rupees. Aap 1000 bhi maan lo, right? Then to what extent did it go? It went to 10,000, right? So that is 10x gains, right? From here to here, right? So 10x times. I'm not talking about 100% gains. I'm talking about 10x gains. So is it a deeply valued stock? The short answer is no, it is not deeply valued. Does it mean that it will definitely crash? I don't know whether it will crash, whether it will not crash. But to me, it is not a value buy. What is the reason for Tata Elxsi to go up like massively? According to me, it was the AI narrative. Very similar to how Tata Motors gave a massive breakout. It kept on running after running after running. Why? Because of EV narrative. Now, is the EV narrative completely played out in India? No. Has the AI narrative completely played out in India? No. So these, according to me, are slightly overvalued stocks. An overvalued stock can continue to be overvalued. I'm not saying that it will definitely crash or not crash, vagera, vagera. I'm very, very happy making like 17 to 25% CAGR on my portfolio, which I can easily make by following my own principles that I'm making. I hope you enjoyed this conversation. I'll have to unfortunately cut the video short here. What I will do is that I will release part 2 of this video on my Hindi channel. The links are given in the description and comment box. I will run more case studies so that you understand this entire game of what is overvalued versus undervalued. This is a phase where we have definitely moved because of increased debt in the world. There will be a lot more volatility on the stock market. Unless you understand how to book profits, rotate your capital, you will not be able to make much money in the stock market. That is again my hypothesis. As a next step, learn how to optimize your portfolio. That will help you prevent the volatility that happens in the stock market. It would allow you to stay invested in the stock market. For that, you need to understand portfolio construction. So go and watch this video. Thank you so much for watching, and I'll see you soon.